Okay, Vaidyanathan, Managing Director and CEO with IDFC FIRST Bank joins us. Let's take a conversation ahead, understand how things have transpired for the quarter gone by. Good morning, great to have you back on ET now. Your deposit growth is 44% while the industry is facing some pressure. How do you see the deposit growth going forward? Is this number sustainable?
Let me tell you something even more interesting. Last year we brought down our deposit rates from up to 10 lakhs from 7%, we were paying 7, we brought it down to 4%. And then still our deposits continue to rise this way. So clearly, I think our bank is doing something really to the customer service front. We are really paranoid about customer experience, customer service. When they come to our branches, when they talk to our people, So I think really good amount of customer service, good products that we have in the marketplace. I think something is, goodwill is fantastic for our bank. I think they're all coming together.
So we take your point. While there is an edge with IDFC First has been on deposit side, how should one look at the deposit growth on a larger base going forward, and what's your guidance there?
Well, I can talk. This year, for example, since the fourth quarter yet to come out, it's just playing out. I can say that this year, as such, overall, you should expect at least a 40% rise on deposits at the bank. Looking good.
Sure. Whether your deposits was one of the issues that the bank was facing. So if we were to ask you, what were the other key issues when you took over, and where does the bank stand on them as you approach now FY25? Do you believe that they are, they were comprehensively addressed and that they are behind you now?
No, now there are no issues, so to say. Now bank is like super smooth and everything is good. But really, if you press me to say that, okay, what was the issue? The issue was mainly, I'd say that bank had very low operating profit. You merged a domestic financial institution with a company. So operating profit of the bank is very low. Now I'm very happy to say that the quarterly core operating profit, no treasury income, no trading income, nothing, just core operating profit of the bank is now touching upwards of 1,220 crores or so. So that's like taking us to annualize 5,000 crores. So I think to build a strong profitability buffer, it's I'd say the biggest address. So people can be rest assured this trend will sustain for a while.
Right. Your NII also has seen a solid growth. Your NIMs continue to expand. But what about your cost to income? Because that is at 72% and your FY25 target is to bring it down to 55%. Is that achievable?
No, if you recollect the last time we talked about it, and I said we'll edge towards something that was 65% or so. Actually, you should see where it came from. So we should not forget that. Pre-merger we were 92%. So we've trailed it down from 92 all the way to 72, and that's a significant drop. So this issue is getting addressed. And I can't even call it an issue because the setup stage of a bank, what you do is you start a bank, we have very low on deposits. So we had to set up branches, no question about that. We had to set up ATMs, we had to set up the whole infrastructure, hire people. So the setup stage of cost of the bank, they come or they come. And then they come down. With scale, it will come down. I think it will just come through normal course. It will just happen.
Morning. So tell us what the levers are that you're going to use to bring your cost to income lower.
Yeah, it will come down. One is, of course, we're going to pay off some high cost deposits. That also benefits in that equation. The branches we set up, they start becoming more and more profitable as the years roll by. Many of the branches just 1 year old, so they all need their own time to become profitable. The third thing is, of course, that many businesses we launch because they just launched, they are in the negative part of the cycle. They will all become profitable. So listen, this is a very simple scale game, nothing to be done, and it will happen by itself without pressing too many buttons.
One thing which is aiding the cost to income coming lower would be fee income, and that has, really stood out. So what is aiding it? And the question is, do you think that your fee income is going to be sustainable?
Yeah, this year's fee income has been quite strong over all 9 months for the bank. That's because we launched some businesses that are very fee intensive, like a credit card business, FASTag, cash management services. So they are all, let me say, they're all at the early stage at this point of time. So as they scale up, the fee income will grow. We don't see a problem with that.
Right. And your loan growth, that seems pretty solid at 25%. Your credit quality also is currently great. But what is the case across the industry right now? And what happens in the next few years if things do get challenging? How comfortable then would you or are you with your credit quality?
See, something very important has happened in the country. There are, let me just say, some very good guardrails that have got created in the country, which is a very significant development for India, a structural business, meaning that, there are 4 international grade credit bureaus that have come in the country. That's very important. Cash flow underwriting models have come. I think some structural, changes have come to the country. So that should actually hold credit in good stead. Of course, they should be very, very careful at all points of time. But I do believe country structurally headed for slightly somewhat better credit.
And is the plan to fund loan growth via deposits? Because you're guiding for about 40% on this on a large base. Are you worried about competition?
Well, competition will always be there. That's good for India, good for banking, good for everything. But we are a very small player, let me say, in the overall system. Our deposits of 1 lakh crore, Indian system is about 180 lakh crore. So we're already playing in competition. It's not a new way.
Right. Vaidya, such a pleasure having you on the show today. Thank you so much for taking the time out and joining in on ET Now. Let's revisit what the market has settled in at. After that uptick, we've picked up only further amidst a lot of earnings reactions. The index has